Hello, podcast listeners. We know podcasts are a great way to catch up on a program that you may have missed on KSJE, and it's provided as a free service of this radio station. But you know, KSJE is now listener-supported, and so while you enjoy this podcast, we hope that you'll also take some time to join KSJE. Become a member today. It's quite easy to do. Just go to our website at ksje.com/support and pick the level of support that best matches your budget. Thanks again for listening. Here's your podcast. The material discussed in this program is for information purposes only. It is not intended to be used as a recommendation for investing or as legal advice. Each person has his or her specific situation, circumstance, and objective, and should consult their own personal advisor or counsel. Thursday morning here on KSJE, and it's time to check in with Jason Calcote as I adjust the camera, because I didn't do that yet, but I adjusted Jason's because he's here this morning. Good morning.
Good morning.
Thank you for coming in.
Well, thanks for having me.
It's good to have you here, and lots been going on since we last talked to you, and so I guess what? Interest rates are got to be one of the big things.
That's one of the big stories right now. Yep, the Fed just got done with their meeting, and they did what everybody expected. They cut rates again by 25 basis points.
Okay.
The current administration thinks they probably should have cut them a little more than that. But
really, did they mention something about that?
That's a whole other story.
Did they say something? Maybe just a little in an offhanded, subtle way.
Right, yeah. Total subtlety.
Yes, sir.
So they cut it to the range of 1.75% to 2%.
Okay.
And really the Fed comments on this, to summarize, they took this step to help keep the U.S. economy strong in the face of notable developments, geopolitical developments, really.
Right.
And to provide insurance against ongoing risks. That was their comment after the meeting.
They didn't use the R word at all.
They didn't.
Okay.
They cited weakness more in global growth and trade policies as things that have been weighing on the U.S. economy right now. They stressed that a moderate policy move should be sufficient to sustain U.S. expansion.
Okay.
And they did leave the door open to more extensive rate cuts, but they don't think that that's where it's going to go.
Right. Seems like nothing more this calendar year. At least that's what a lot of the analysts were projecting from the comments.
That's what it sounds like. The Fed is really split into two camps. One camp really doesn't think that rate cuts are needed because our domestic spending is solid. And then we've got this other camp that's worried about global weakness. And really one of the things that's been interesting is inflation. It's consistently running below their 2% target.
Right.
So usually, the Fed uses these interest rates to control that.
Yeah.
But it's been running consistently below target. So
okay.
They're a little bit concerned about that. But, I mean, you look at some of the domestic economic indicators. So domestically, consumption numbers, which really account for most of the economy, we're talking about retail numbers mainly.
Right.
Up about 0.5% in August.
Okay.
GDP forecasts, the Fed forecasted a 2.1% GDP growth back in June. Now they're up to 2.2%. So it doesn't sound like a lot, but that's billions of dollars. You're talking about a country's GDP. And then the pace of U.S. home construction was another big one in August. Jumped 12.5%, which is the highest number we've had in 12 years. So domestically, we're looking okay. The major indexes were all up after the Fed comments. They were down earlier in the day.
Okay. We can take a look. Take a look at the charts. What we've got this morning, sure, and see Dow Jones, is up year to year.
Yep.
This is looking past 12 months, everybody. So there you go, up almost 78 points.
Almost 78 points today. Yep.
So there's that, and then the S&P still in the green.
Yep, starting green.
Right. Okay.
Again, year over year, we're looking good. We had some bumps in the road, but I mean, you keep your strategy, what you're comfortable with.
That's what you always tell us.
Yeah,
that's right.
Buy and hold.
Okay. And then Nasdaq is back up. I think last time we talked, that was in the red.
It was a little bit in the red. Yep. We're back up in the tech heavy sector now. I think there's some more optimism for our meetings with China in next month. So.
Right.
So we're doing good there.
But then we're going to talk about oil.
Yeah, we had another big story that's really dominated the headlines this week, has been oil.
Sure.
If everybody recall, we had attacks on some of Saudi Arabia's oil-producing sites.
They're a big one, right? I mean, it really cut them in half almost, their output, right? 50%.
That's exactly what it did. It cut them in half. Coordinated attack over the weekend. It affected them about 5.7 million barrels a day, is how much it cut their construction by. So, like you said, about half. So oil prices surged on Monday. We were up about 14.7% to $62.90 a barrel. So everybody was thinking, this is going to take a while for Saudi Arabia to really get back online and ramp up their production.
Right.
Well, then Tuesday hit. And they came out and said that the kingdom's oil supply would soon be back online, and they'd already restored 50% of what was lost in 2 days. So oil took a pretty big fall on Tuesday. We were down almost 6%.
Okay.
To 59.34 a barrel. And then Wednesday, more comments coming out from the Kingdom of Saudi Arabia, really saying that they're managing the situation. They should be back up to 100% capacity by the end of the month. So again, oil slid a little bit on Wednesday. We were down 2% yesterday to about 58.23 a barrel. So still hanging around that $60 range.
Sure.
Which is pretty comfortable for the most part.
Apparently, it's not causing too many jitters and concerns, but I think the bigger issue might be how this attack happened with drones and showing some of the vulnerability, perhaps, of some of the facilities like this worldwide.
That's definitely true. It just goes on to reiterate the instability in the region. A lot of international fingers are pointing at Iran right now, which is not a great scenario for the region as a whole. So yeah, again, you just have these geopolitical uncertainties with Brexit looming. This is going on. We still can't really come to a deal with China.
Yeah.
So a lot of this stuff, and I think, circling back to the interest rates, a lot of this stuff is to manage the global threat to our domestic economy. So not necessarily that the U.S. is slowing down right now, but on the horizon, the Fed is seeing a more global slowdown, which will in turn affect us.
Right. And, of course, we're all part of the global economy,
That's right.
So things can affect other countries, for sure, that happen in other places,
That's definitely true. In the digital age, globalization is real, and we are affected by everything, even if it happens half a world away.
Very true. All right. Well, Jason, thanks for coming in this week.
Thanks for having me.
Appreciate it very much. That's Jason Calcote, everyone, from Citizens Trust and Investment Corporation. He is here with me every Thursday on KSJE Farmington. Did you enjoy that podcast? We hope that you did. And if you did, share it with your friends. And if you really want to keep podcasts like this coming, please support KSJE. You can do it easily online at ksje.com.